November budget and economic forecast, a financial snapshot prepared by Minnesota's fiscal agency, projects a budget surplus of $2.4 billion for the current fiscal biennium that runs through June 2025. That number is $808 million more than was projected at the end of the 2023 legislative session. The report attributes the increase to stronger than expected consumer spending, business investment, and employment. Budget Commissioner Aaron Campbell called the report mixed and urged caution because spending is expected to exceed revenues by 2027 under current conditions. Governor Walz and legislative leaders responded to the presentation.
I can assure you our budget will be limited. It will be focused on a responsible bonding bill that includes the entire state and projects that matter. And then it will be very focused on implementing policies that we need to get done. You don't have to guess to the future. My administration's been doing this for 5 years. We've navigated the most volatile economic situation since the Great Depression, and we've done so by balancing the budget with surplus while investing heavily in the middle class and cutting taxes for the middle class. We are going to be responsible, measured, balanced, and we're going to continue to deliver those programs, whether it be meals or whether it be the disability services or whether it be roads and bridges and water treatment plants. All of those things that we know, all those things that we implemented that we know make Minnesota a destination, a place where we said it's the best place to raise your family and your kids. We're seeing that pay off in some of these investments. And I'll go back to it and end with, just to be very clear, Mayo Clinic didn't invest $5 billion out of nostalgia. They didn't invest $5 billion just because they started here. They invested $5 billion because this was the best place to do it. This had the best workforce, the best cluster of things around them, and the best opportunity for them to get the results they want.
State government can't meet all the needs that are out there. There certainly are unmet needs out there. And when we talk about a projected surplus, we're not necessarily saying that all of the needs that exist in the state of Minnesota have been fully funded. And I think Representative Pinto had a phenomenal hearing, I think it was around November 13th, on the needs in childcare that are still out there. So it's wonderful for those families at the Prior Lake New Horizon, and I'm sure other New Horizons, who got a 6 to 7% decrease in their rates. But for some families, that's still a whole bunch of money that they're spending in childcare that it makes things tight for them. Do I wish we could do more on childcare? I certainly do. Do we have the revenue to do it? It doesn't look like right now we have the ability to make an additional commitment. We'll see what the numbers show in February.
Spending is expected to exceed revenues. That's a deficit, my friends. And so that's what we have to get a handle on. And the numbers prove that out if you dig in the document. And I'm just very concerned that with $2.4 billion surplus in the 24-25 year, that then translates into a $2.3 billion structural deficit in the 26-27 year. Like, if we do nothing, we will just barely be keeping the budget in balance. And clearly, there are all these requests coming in daily for new spending. We cannot afford it. What we saw in the last session was that the Democrats spent $17.5 billion in surplus. They raised taxes $10 billion. They grew the government by nearly 40%. And now we are seeing the results of that.
You heard the governor even say that he wants to be fiscally conservative. And if we want to be fiscally conservative, we can't build budgets that project a deficit in it from the get-go. And that's what we have here, is budgets that have built-in deficits. So we have to take a look at the spending, figure out what's going to happen there. But I just look at this, look at what's happening to our state budget, and we got to take a different approach to this.
Joining me now in the studio to provide some analysis of the November budget and economic forecast is Minnesota's state economist, Dr. Laura Kalambokidis. Thank you so much for being here.
Glad to be here.
The projected surplus of $2.4 billion for fiscal year 24-25 is about $800 million more than was projected near the end of the last legislative session. One of the factors contributing to that growth is that Minnesota's employment level has surpassed the pre-pandemic peak. The labor market, however, remains tight, with the Bureau of Labor Statistics reporting that there are still more than 2 job openings per unemployed worker in the state. So what is the employment outlook?
Yeah, you know, how the employment outlook looks to you, it depends on which side of the table you're on, right? So if you're a worker selling labor, you want that tight labor market so that there are lots of opportunities for you. You feel like you can quit your job. You feel like there are lots of places you can go. But if you're somebody trying to hire people, then you would like that easing that we talked about, some of that easing in the labor market. So what we expect is that we had expected the labor market to ease from what had been unsustainably low levels of unemployment, sort of record low unemployment, record high demand for workers. We've eased somewhat from that, and we do expect it to continue to ease as economic growth slows in the nation as a whole.
Okay. The Federal Reserve raised interest rates 4 times so far in 2023. Jerome Powell, who is the chair of the Federal Reserve, told the New York Times last week that the central bank may be done raising rates as long as the economy and inflation continue to cool. What impact do actions by the Federal Reserve have on Minnesota's economy?
So there are the macroeconomic impacts. So when monetary policy succeeds to slow the economy, bring inflation down, that helps Minnesota because we are, we then benefit from lower inflation. But at the same time, the way they're doing that is by raising interest rates, or the way they have been doing that is by raising interest rates. And so that's something that really hits both businesses and households in the pocketbook.
And it probably has similar effects all across the United States. Like, this is sort of a central bank decision, and then there's a trickle down, and it does impact every single state in the nation. Is that right?
That's right. And Minnesota is very closely tied to the U.S. economy. And so as the U.S. economy goes, pretty much that's how our economy is going to go too.
Consumer spending and business investment grew faster than was anticipated in the February forecast. A mild recession had been anticipated, and it never materialized. So what do you attribute the fact that the recession didn't happen? And is continued growth in spending by individuals and businesses likely into the future?
We had surprises all year, economic surprises all year. U.S. employment grew faster than expected. Consumer spending was more resilient than expected. Business investment more resilient. So it surprised a lot of economists throughout the year. Some of that may be that there was more excess saving or at the time of the pandemic. Especially high-income households were able to save more. And low-income households seem to have spent down the excess savings that they made during the pandemic with pandemic unemployment insurance benefits and the stimulus checks. But high-income households were able to hold on to some of that money and are spending it now. And so that has made consumer spending more resilient. Is it likely to continue? Probably not at that high rate. The expectation is that it all slows down, because that's what the Fed is trying to do, is get this economy to slow down so that inflation comes down.
Now, I do recall reading that credit card debt has increased among consumers. And so how does that play in?
Yeah, so that's the way the middle and lower income households are continuing to spend, is by now turning to credit card debt. So from a macroeconomic perspective, well, that's good. You got consumer spending going. But from a household perspective, it's not. It puts people at higher risk.
There's also the issue of inflation, which is impacting not just consumers and businesses, but also the budget forecast. Yeah. Due to a law change last legislative session, the forecast must now take into consideration the impact of inflation in future budget projections, beginning with this one. From an economist perspective, how does this impact the outlook?
So it was a good thing to explicitly put inflation into the spending forecast so that we have some parity on both sides of the ledger, because inflation does affect the revenue forecast. So that's good. It's more complicated than people realized it was going to be, but it affects the budget forecast because it gives budget decision makers a better, clearer, more accurate picture of what the financial situation is. And so I think it's causing people to have a little more caution than they might have had it not been in there.
So, for example, had it not been in there, then the outlook for the next biennium, 26-27, would have shown more of a surplus than the roughly 80 million that it currently is showing. Is that right? That's
right. And now, for many years, the budget division has been has been presenting the inflation number. So it hasn't been officially in the expenditure estimates, but they say, and here's what the inflation would be if we were going to put it in. So that information has been available for a while. So I think, but yes, it would have been a rosier picture.
And it does change the conversation.
I think it does.
Yeah. It wasn't mentioned in the budget presentation, but the report notes that a combination of higher interest rates, rising home prices, and limited inventory are challenging affordability. A study cited notes that Minnesota ranks 20th in affordability. And being a Midwestern state that is traditionally more affordable, how does this impact Minnesota's outlook?
Yeah, you know, one of the things that matters a lot to Minnesota right now is labor force growth. Like, we need people in the state. We need people to see Minnesota as the place where you want to come and raise your family and live and work. And housing affordability for working people is something that can be attractive. And so it's an interplay. This housing affordability affects how attractive the state looks for people who are looking to move from more expensive coastal cities, for instance. So it's been an advantage for us in the past that the Twin Cities has been more affordable, for instance, than New York or Chicago even. And so if there's some more compression where we become less affordable, they become more affordable, then we lose a little bit of that advantage. So I see it as an attractiveness and labor market issue, and then in addition for affordable housing on the lower end of the spectrum, it's a justice and housing issue. So something definitely to keep an eye on.
The report states that increased immigration, delayed retirement, and improved access to child care could support greater job growth, leading to more potential upside in the forecast. What are some of the potential downsides?
So we talked about inflation and monetary policy and how we think we know what's happening here, that we've been surprised this year. So that interplay between inflation and interest rates and what the Fed does, that's risky. The Fed is trying to achieve something that they've never done before, which is this mythical soft landing following a recession or following an inflationary period. And so that's a risk. And then there are international risks. So conflict in the Middle East, conflict in Ukraine, economic volatility in China. These are all things that if they are exacerbated or more prolonged, they can affect the U.S. economic outlook.
Dr. Loehrke, Kalambokidis, it's always a pleasure. Thank you.
Glad to be here.